All right, buckle up, everybody, because by popular demand, we are diving head first.
Into the world of ETFs.
You got it.
Yeah.
ETFs, they're everywhere you turn.
Right.
And for good reason. But, gotta be honest,
Yeah.
sometimes wading through all those articles can feel like, I don't know.
Overwhelming.
Exactly. Like trying to climb a wall of financial jargon.
It's a lot. But that's why we're here. We did the digging, so you don't have to.
Precisely. And not just like skimming headlines.
Oh, no.
We are talking in-depth reports. And get this, we've got 3 amazing sources today.
Lay it on me.
Okay, first up, BlackRock.
The heavy hitters.
You know it. They manage like trillions of dollars in assets, so safe to say.
Yeah.
They know ETFs.
They're not messing around, so what are they telling us?
Well, they give us the inside scoop on what makes ETFs tick, why they've gotten so crazy popular.
Right.
And because I'm all about the how it works, we're going behind the scenes with BME Exchange. They're a major stock exchange.
They see it all, yeah.
Exactly.
Okay.
They're breaking down the actual mechanics of how ETFs trade, which, trust me, gets fascinating.
Oh, I bet. But we can't just talk shop in the abstract, can we?
Never. Which is why our third source is all about you, the individual investor.
Love it. Who is it this time?
As Strategy as the Inversion, they're a publication geared specifically towards, well, folks like us who want to make smart money moves.
Okay, so we've got the big picture, the inner workings, and the individual investor's perspective. Where do we start?
The only logical place of beginning. An ETF, I mean, I've seen them compared to everything from like baskets of goods to, I kid you not, actual baskets. Got any favorite analogies you've come across?
Well, the one that always clicks for me is the mutual fund comparison. Think of it like this. You know how a mutual fund bundles a bunch of different assets together, right?
Stocks, bonds, that sort of thing.
Exactly. An ETF is kind of similar. It's that bundled approach. But the key difference, the thing that makes it an ETF, is it trades on the stock market, just like any other stock you'd buy.
So it's like you get the diversification of mutual fund because you've got all those different assets inside it.
Yeah.
But you also get this on-demand trading power.
Yeah.
You can buy and sell throughout the day.
You hit the nail on the head. That's the magic of it.
See, this is why I love deep dives. We uncover the magic. Okay, so speaking of magic, or maybe it's more like strategy,
Go on.
I came across this analogy in the BlackRock report about a basketball team.
Mm-hmm.
They were talking about how each player contributes in a different way to the team's success.
Right. Makes sense.
And they said it's the same with ETFs. Each asset in that basket is like a different player. They each bring something unique to the table. And that's how you get diversification.
Right.
So it's not just about having a lot of stuff.
Right.
It's
Yep.
about having the right stuff
Yeah.
and the right balance.
Exactly. And that's where it gets really interesting because not all ETFs are built the same.
You're saying there are different approaches to this whole diversification thing.
Absolutely. You've got your market cap weighted ETFs, where the companies with a bigger market capitalization, think Apple, Microsoft, those giants,
Yeah.
they make up a larger chunk of the fund.
Yeah.
Then you've got your equal weighted ETFs, where every company gets an equal slice of the pie, regardless of their size.
Oh, that's fascinating. So it's not just as simple as like throwing darts at a list of stocks. There's real thought
Oh, tons of
that
thought.
goes into building these things.
Yeah.
I'm starting to see why people get so into ETFs.
Oh, just wait. We're just getting started.
Okay, so ETFs, they're not just randomly assembled.
Not at all. There's a real art to it. But I imagine some of our listeners might be thinking, okay, sounds cool, but what's in it for me?
You read my mind.
Yeah.
Why should the everyday investor care about ETFs? What makes them stand out?
Well, that's where those benefits we hear so much about come in.
All those articles, right? Diversification, low costs.
But honestly, they totally live up to the hype.
So let's break it down. What really jumped out at you from these articles?
Well, for me, seeing BlackRock talk about how cost-effective their iShares core ETFs are.
They said like 10 times cheaper than your average mutual fund.
Yeah. I mean, that difference in fees, that can add up big time over the long run. Less money going to fees means more money potentially growing, right?
It's like a snowball effect, but in a good way.
Exactly. It's the gift that keeps on giving.
Okay, that's huge.
Yeah.
What about this whole transparency thing? I know some investors really value that.
Oh, absolutely. And for good reason. You know, with an ETF, you're not left in the dark. You know exactly what's in it, every single stock, every bond. It's all laid out in the prospectus. Remember how you said you wanted to see exactly what's in the metaphorical basket?
Transparency is key, I always say. Which, speaking of baskets, made me think of something I read in that Strategies Day Inversion piece. They were talking about how ETFs can give you access to all sorts of markets, right? Like emerging markets, really specialized sectors like biotech, even things like infrastructure, which I'll admit kind of blew my mind.
I know, right? It's like opening up a whole world of investment opportunities.
Exactly. But how accessible are these more niche ETFs, really?
That's the cool part. They're surprisingly accessible. You just need your regular brokerage account, and you can buy and sell them just like any other stock.
So you're telling me I could theoretically invest in a renewable energy ETF
Oh, absolutely.
without having to research every single solar panel company out there?
Precisely. It's diversification and convenience all rolled into one.
Okay, that makes it sound almost too easy.
Yeah.
I have to ask, how volatile are these more specialized ETFs? I mean, risk and reward, right? They go hand in hand.
That's a really good point. You always have to consider the risk. And you're right, a sector-specific ETF will probably be more volatile than something like a S&P 500 ETF.
Right, because it's more focused.
Exactly. But here's the thing, that volatility can work in your favor too. It means potential for higher returns.
So it's a trade-off, as always.
It all comes down to understanding your risk tolerance. What are you comfortable with? And that's where a financial advisor can be a great resource. They can help you figure all that out, guide you towards investments that match your goal.
Right. They can help you build a strategy that makes sense for you. Okay, so we've talked cost, we've talked transparency, accessibility.
You're on a roll.
We've touched on diversification and flexibility, but I feel like those two deserve their own moment in the spotlight.
Let's do it.
All right, so diversification and flexibility. We danced around those a bit, but let's really unpack them.
Let's do it. Starting with diversification, we talked about that basketball team analogy.
Right. Different players, different strengths.
But I think it helps to get even more concrete, you know?
Absolutely. It's not just about having some stocks and some bonds, checking a box. With ETFs, you can diversify across, like, whole sectors,
Exactly.
entire countries even, different investment styles.
You could have U.S. tech, emerging markets, maybe a sprinkle of global bonds, all in one portfolio.
And that ties back to what BlackRock was saying about managing risk, right?
100%. When you've got your investments spread out across different asset classes that don't all move in the same direction.
Right. So they're not all going up and down at the exact same time.
You're essentially creating a safety net. If one area takes a hit, the others can help cushion the blow.
I like the sound of that.
Yeah.
Okay, now let's talk flexibility, because that's another huge selling point of ETFs, wouldn't you say?
Oh, without a doubt. Think about it. You're reading an article, right? And it's talking about how renewable energy stocks are on fire.
They're booming.
You get that feeling like, I want a piece of that action. With ETFs, you can jump in right then and there.
You buy those shares just like that. It's not like the old days of waiting for mutual fund prices to update at the end of the day.
Exactly. You're not stuck waiting on the sidelines. And speaking of things that keep things moving, we have to talk about those specialists that the BME Exchange article mentioned.
Oh, yes. That piqued my curiosity. It sounded a bit like a secret society of ETF traders. What's the deal with them?
It's not as mysterious as it sounds, I promise. Essentially, these specialists, they're like market makers.
Okay.
Their whole job is to make sure there's always someone to buy from, someone to sell to in the ETF market. They're the ones making those on-demand trades possible.
So they're kind of like what do you call them? The people who run the auctions?
Exactly. They're the facilitators. And they provide something super important, liquidity.
Which basically means, in plain English,
It means you can easily buy or sell your ETF shares without causing huge price swings.
so it keeps the market running smoothly. Okay, that makes sense. Well, we have covered a ton of ground here. I feel like we've explored the ETF ocean from the surface all the way down to those specialists hanging out on the ocean floor.
Hopefully no decompression sickness.
But in all seriousness, before we wrap up this deep dive, we got to talk risk.
Always. Because no investment is completely risk-free.
Right, even ETFs. BlackRock mentioned two biggies. Market risk, which seems pretty straightforward.
The whole market goes down, your ETF probably does too.
Right, makes sense. But then there's liquidity risk, and that one's a little fuzzier for me.
Okay, so imagine you've got an ETF that tracks a super, super niche sector, like underwater basket weaving.
Underwater basket weaving, are you making that up?
Maybe, but you get the point, right? It's very niche.
I do.
So if that ETF isn't super popular,
Right.
not a lot of buyers,
Yeah.
you might have a hard time selling your shares when you want to.
So you might have to lower the price, potentially lose money.
Exactly. It's all about supply and demand.
Hmm.
Popular ETFs, not usually a big issue, but venture into the more obscure corners of the ETF world.
Liquidity risk becomes something to think about.
It's worth a conversation with your financial advisor, for sure. Speaking of which,
See, you read my mind again. That's where I was going to go next.
Mhm.
It seems like a financial advisor could be really helpful in navigating the world of ETFs.
they can be invaluable. They can help assess your risk tolerance, walk you through the ins and outs of different ETFs, make sure you're making choices that align with your goals.
It's like having a personal ETF Sherpa. So as we wrap things up here, what's the key takeaway for our listeners today? They're hopefully feeling much more ETF savvy than they did, 20 minutes ago?
For sure. I think the big takeaway is this. ETFs are powerful tools. Diversification, flexibility, cost effectiveness, they've got it all. But like any tool, you've got to know how to use them.
Right. Understand the risks, do your research.
And maybe talk to that financial advisor while you're at it.
Absolutely. So for all of you out there listening, you've now got the basics. But the journey doesn't end here. What kind of ETF is calling your name? Something that aligns with your values, maybe.
Or maybe taps into a market you're curious about.
Exactly. The beauty of ETFs is that there are so many options to explore. So keep learning, keep asking those great questions, and until next time, happy investing.
See you next time.